Hey everyone, happy Thursday, April 18th. It's about 11:15 on the West Coast, and it's time for another market update. And earlier this week, we got some more market data that kind of shows that the markets or the economy in the US just keeps chugging along. We got March retail sales. They were up 0.7% month over month, and they also made a positive revision to last month, February, from 0.6 to 0.9. And the reason this is important is inflation. The more we're spending, the more there's inflation. The Fed's looking at this and saying, "Hey, the American consumer has tons of money. We don't have to cut rates." But we also know that credit card usage has gone way up over the last couple of years. So a lot of this, spending we're doing as Americans is being put on credit cards, and that's not sustainable. So, at least on paper right now, retail sales still seem to be booming, but eventually, that will come due. The next thing we got this week was March starts and permits, this is new construction, and they were down across the board. So, like I said, starts, these are homes that were started, homes and apartments and things like that, multifamily that were started in the month of March, permits that were drawn for the month of March, and then houses that were actually completed in the month of March. And as you can see, down across the board, 14.7 negative, negative 4.3, and negative 13.5 on completions. One of the more important ones that we look at here is permits. Permits were running about a 1.5 million 3-month average, down to 1.46, but let's call it 1.5 million. And the permits really is our first indication of future inventory. The first thing someone's going to do before they build a home or build an apartment complex is pull permits. So our future inventory is running about a 1.5 million annualized pace. Future demand, which is household formations, that's running about 1.8, 1.85 million. So right now, basically future demand is outpacing future supply still, which is price supportive, and it basically just means we don't have enough housing for people. And it's not an easy fix. We can't just snap our fingers and produce this housing overnight. So this is something to keep an eye on. The more we build, the better for new homeowners. People that are current homeowners. Like I said, this is price supportive. The less competition you have out there, the more your house is going to be worth. Next thing we got was March existing home sales. So this is, houses that went basically closed in the month of March. They were down negative 4.3% month over month, negative 3.7% year over year. Let's take a closer look at this. Like I said, down month over month, but remember last month with the highest month in a year. So, the month over month number slipped a little bit, but it's also coming off a pretty big high. And I think this would be still the second biggest number of sales since last May. Median home price was up slightly, 2.3% to 394. Inventory jumped quite a bit. It's up 14.4% year over year, about 1.11 million units out there. Keep in mind that's still, 2008 we had about 4 million homes available. So still a lot less than we at that point, a lot less than we need out there. There's about 3.2 months of supply. A normal market's about 4.6. So still a tight market, getting a little better, but still a tight market. But some of these interior numbers were interesting. The days on market dropped pretty big from 38 to 33. So that indicates competition. The quicker something sells, the more competition's out there. Sold over list price jumped from 20% to 29%. So the house went on the market for 400, 29% of homes sold for higher than that price. So that's, again, a sign of competition. If something's going over asking, that means that there's a lot of, competition for that home. First-time home buyers made a big jump from 26 to 32, which is great to see, with rates as elevated as they are. Cash buyers dropped and investors dropped. So, the first-time home buyers ones is a good one to see, like I said, because, rates are higher, but kind of like what we talked about, a little bit more inventory out there. That's helpful for them. But also, right now, at least with rates being higher, there's a chance to get a little bit more help from the sellers, which it looks like a lot of first-time home buyers are taking advantage of. Oh, and then I'll take a look at these in graph form real quick. Kind of interesting to look at here. So we have, these numbers for first-time home buyers as a percentage of sales. You see that spike here this month, almost at highs, going back the last couple of years. Percentage of properties sold above list price, we're spiking here. As you can see, back in February 2022 or so is where it was at its highest level. All cash deals coming down a little bit, and then average number of offers received per sale is ticking up here to 3.2. But again, look, February, around that February 2022 spot is where it was at its highest, which again, that's a lot of competition. Things are selling above asking. There's more offers. That means more competition, which is what would happen, if rates came down. If rates, I think the number they throw out there is that for every percentage point our rate comes down, about 5 million more borrowers become qualified. That's 5 million more people looking to buy that home that maybe you're looking at. Moving on, next thing we got initial jobless claims. That came in at 212,000 for the week, under expectations. This is still seen at really low levels. Important about this one, this is the number they use as a sample week in some of the formulas when we get the BLS jobs report coming up in May. So doesn't necessarily bode well for us for that jobs report. Miscellaneous stuff. So a couple different things. So Fed talk, Jerome Powell came out, made some comments. Basically, the one thing positive he said is that they're not looking at hikes. That's how far things have gone, where we were talking about cuts and now people start getting worried about them hiking again. And he basically squashed that. So that was good. Iran, Israel, as you can imagine, anything that involves the Middle East and oil is inflationary. Oil prices are spiking. That means gas prices are spiking. That trickles down to the rest of the economy. Everything gets more expensive. So that's something we definitely want to keep an eye on. We don't want that to get a little crazy over there, crazier than it's been. And then CoreLogic rent. CoreLogic rent came out and actually spiked in March from 2.6 to 3.4, which is a pretty big jump. So we got to keep an eye on that just for future, future inflation, stuff like that. But again, shows you why being a renter is not much better than trying to buy a home right now. Next thing, average 30-year came in at 7.43, up from 7.37 last week. Pushed 7.5 earlier in the week. We got a little bit of help yesterday, but again, still way too high. Things going in the wrong direction. And then important dates upcoming. We got the inflation report next Friday. That's the Fed's favorite. We'll have to see how that comes out. That'll be our first chance to have any sort of rally, things going in our direction. The Fed meets on May 1st. Right now, it's a 2% chance that they would cut at that point. 15% chance in June, 40% chance in July. Not until we get to September 18th. Their September means 65% chance of a cut. So things have definitely flipped. Later in the year is when we're expecting rate cuts now. BLS jobs report on May 3rd and then CPI on May 15th. So a lot of important data upcoming. That's our one chance to get those. Fed will change their mind if unemployment spikes, inflation comes down a little bit, stays where it's at, but mainly unemployment. If you see an unemployment number with 4 in it, that's good for us. Not good for people that lost their jobs, but good for mortgage rates. So, but keep in mind, every percentage the rate comes down. So if we went to 6% tomorrow, 5 million more people are qualified. That's 5 million more people competing with you or your clients trying to get a home. So that's better now than when that happens, basically. If anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week. Thanks a lot, guys.